Hello and welcome to our lesson for this week, lesson number 4. We had our first lesson on behavioral finance and then moved on to borrowing. Our last two lessons have been on investing, with the first one kind of a more general investing risk versus reward kind of information. And then last week's a little bit more specific on investment, different types of investments. So I've enjoyed hearing back from you, getting feedback from you. I've enjoyed seeing your stock selections, and it's been fun to see that a lot of you have picked similar stocks or the same stocks, which didn't totally surprise me. So today will be probably a short lesson. I don't think it'll be much more than 15 or 20 minutes. I know I've said that before, but this one is a little quicker material, but it's just kind of on banking and bank accounts, checking. Why should I pay with a check? How do I use a checking account? How do I track what I spend? So a little bit just about general banking, and this information is important. My daughter was with us recently. She's up in college, about another year left in college, and she still had some questions for me on when she was in town last time on withdrawing money from the ATM machine and how to do that. She was so used to just swiping her card and using her debit card to pay for things, but going to the bank and actually using the ATM machine wasn't something that she'd done very much. So anyway, these things are pretty important to learn. So with that, we'll get right into it here. First, demand deposits. With a checking account, you deposit your money with these banks or these institutions, credit unions, and that money is available for you to withdraw really at any time that you want to. You have access to take that money out with a bank teller, where you actually go into the bank. You would fill out what's called a withdrawal slip, where you put your account number and the date and how much money you want to take out, and then you need to sign that. And you present that to a bank teller, and as long as you have money in your account, they'll let you take it out. You can also use an ATM machine. That's what I mentioned where my daughter wanted some help recently, where you go and you drive up machine or a walk-up machine. You put your card in there and you type in your PIN number. Once you type in your PIN number, it usually gives you an option to take money out of your checking account or savings account if you have it, and then how much. In money is usually taken out in $20 increments, and there's usually some kind of a maximum on there. So keep that in mind. With going to the bank teller, there's really no maximum, but with an ATM, there usually is. They'll ask you if you want a receipt or if you don't want a receipt. So ATMs are very convenient. If you go to the ATM at your bank, they won't charge you a fee. But if you bank at, let's say, Wells Fargo, and you go to some ATM machine in the airport that's just a random machine, then they'll usually charge you a fee. It might be a couple of dollars or whatever. So keep that in mind. I was on a vacation not too long ago, and I needed cash pretty desperately. So I went to an ATM machine, pulled it out. It charged me, $3 or $4, something ridiculous. And then walked around the corner, and there was my bank right there. I could have done the withdrawal free. But anyway, if you need cash, you can go to ATM machine. You can go online nowadays and request that money be sent to you. They won't send you cash, but they can send you a check. Same with, I guess, over the phone. I've never done that before. You can always write a check out of your account. We're going to talk about check writing today. One of the benefits of writing a check, along with just taking cash out of your account versus using a credit card, is that you can only spend it if it's in there. So, if you're filling out a check for $100, you need to have $100 in that account. So there are times when companies or retailers might not accept a check because they have some risk that you're writing them a check, and they don't know for sure there's money in the account. So keep that in mind. Versus a debit card. A debit card is like a check. In fact, they used to refer to them as check cards. And when you swipe that debit card, it will actually pull the money directly out of your account, just as if you were writing a check. So, but for the retailer, it's more comforting for them because they know if there's no money in that account, it's just going to reject the card, versus if they take your check and they go deposit at a bank and now they come back and say, sorry, but this person didn't have the money to pay for this check. Now they got to chase you down and get that money back. So anyway, that's kind of some different ways. Now, debit card is different than a credit card. Lesson 2, we talked about borrowing. With a credit card, you're borrowing money. The credit card company gives you a certain credit limit on your card. Let's say it's $10,000, and you can go use that card at the gas station or at the grocery store or the mall or wherever. And as long as you haven't hit that limit, you're going to be able to spend on it. And you're basically guaranteeing the credit card company that you're going to pay them back. And the credit card company then will pay the retailer up front, knowing that you guaranteed that you're going to pay the credit card company. And if you don't, then they hit your credit and you have a negative on your credit score. So that's how a credit card works. A debit card is different than that. It is just simply coming straight out of your checking account. So it's a lot safer to use that. You cannot overspend with a debit card. If the money's not there, you're not spending it. So I recommend that you use a debit card over credit card if you have to choose one or the other. So how do you write a check? I've thought about this recently with some of my kids, even my daughter I mentioned that's up at school. I don't know if she's ever written a check. So you've probably seen your parents write a check. When I was growing up, we didn't have debit cards. Gosh, we had credit cards, but they weren't used very much. In fact, if you went and used a credit card, they had to pull out this little machine, and it wasn't electronic. It had like these pieces of paper and carbon, and they would set your card on it, and they would drag it over the card, and it would make like an imprint of your credit card information onto this piece of paper that you would then sign saying, I'm going to pay this, and then they would submit that paper to the credit card company. So I'm dating myself a little bit here, and some of the parents that watch this can relate. So growing up, we didn't really use credit cards that much. And so when my mom would go grocery shopping, she would either pay with cash or write a check. So she often would write a check, would be going to the grocery store, and they'd scan all of our items and say, okay, you owe, $57.18. And my mom would pull out her purse, pull out her checkbook, open it up, and fill it all out and turn it in. And a lot of times they'd want to see her driver's license to verify that her name matched the name on the check and things like that. So it's not as common anymore, but it's still something that you should learn how to do. There could be bigger purchases where you need to write a check form or tax payments or things like that. So this, I'm getting attacked by a mosquito here. This shows you a picture of what a check looks like. All right, we'll go through. So on the top right, number 1 is the date. Okay, so that's, you fill out the date that you're writing the check, pretty self-explanatory. Number 2 is who you're making the check payable to. So in this example, XYZ retail store is where this person is shopping. If you're making a check out to the IRS or for your taxes, that could be the United States Treasury that you fill that out to. So it depends. If you get a speeding ticket, Department of Motor Vehicles or Highway Patrol, I don't know, I've never had to do that. So anyway, pay to the order of, that is where you fill out the person that you're writing the check to, and you can always ask that person, who do I make the check payable to? And they'll tell you. Okay, so that goes on line number 2, pay to the order of. To the right of that is a box where you write in the numeric amount of the check. So in this example, it's $150.50. So you've got 150.50, and so you write this out in 2 spots so that it can be verified. So $150.50 is in the box at number 3, and then in number 4 you actually write out the what the dollar amount is. So 150 and 50 over 100 for your 50 cents. So if it was 33 cents, it would be 33 over 100. Okay. Now you can also write and 50 cents if you want to, but most people will write the cents this way with the number over 100. Now notice in line 2 and in line 4, there's like a squiggly line at the end. Excuse me, I had to sneeze. So at the end of this XYZ retail store, there's a line, and at the end of the um, amount, there's a line. That is to prevent somebody from going and adding something to that. So, for example, if someone stole this check, they could maybe try to write XYZ retail store, it's already written there, and then maybe put or, John Doe. And now John Doe takes this into his bank and says, I want to deposit this into my account because it's written out to him or him. So that kind of protects you. Honestly, I don't think I've ever done that. But I have, and I always do the line on number 4. Is if there's any space, sometimes if it's a bigger check or whatever, you're using up all the space anyway. But you always want to completely fill this out, because if you just do 150, then and leave the rest blank, someone could change that 50 to 50-9 and 99 over 100, and now all of a sudden you're giving them $10 more than you had authorized to. So to protect yourself, you want to always draw that line. Okay, maybe you write just 100 and leave it blank, and someone gets a hold of that check and they change that to put $1 million at the end, and now you're writing a check for somebody for $100 million. So, and if that's in your account, you don't want to lose $100 million. All right, so draw a line at the end, protect yourself. Box number 5 at the bottom is a memo, and that's just where you can write something for yourself to reference later on. So in this example, it was for a prom dress. So as you're going through later on, if you're looking to see where you spent your money and you see that you spent money at XYZ retail store and you're like, what did I buy there? I can't remember. You can always go online and see a picture of your check, and then on the memo field, it will tell you what it's for. The bottom right of the check is where you sign your name. That's a signature line. And then at the very bottom of the check, there's these weird looking numbers. And every check is the same. I don't know what the thing is on the far left. It looks like like a backwards, or it looks like a C, I guess. But that doesn't mean anything. And then the little lines at the far right, the 2 vertical lines, that doesn't mean anything. But the numbers in between do. Okay, so the far left number is a 9-digit number, and that is your bank routing number, also known as an ABA number. So that's basically a number that identifies the banking institution. Every bank has a routing number. So this number that'll be the same number on all of your checks that you do with this bank. So it's a 6-digit number, 9-digit number. So this bank's routing number is 002 003 004. The number in the middle now is your checking account number. So in this case, this person's checking account number is 109-232-0004. All right, so you got the number that identifies the bank on the left. You've got the number that represents your account number in the middle. And then the far right number, 1017, is your check number. Okay, and you'll see that number also on the top right of the check itself. So that number is on here twice. We got it on the top here, 1017, and then the bottom, 1017. That is the check number. So the next check that you write behind this one will be 1018, and then 1019, et cetera, et cetera. Okay, so these numbers are pretty important. If you get a job and you want a direct deposit, so you want money being electronically deposited into your account, they will need to know the ABA number and the checking account number. So it's going to be easy to find that. If you have your checks or checkbook, just go to your checkbook, look at the bottom, you got your ABA number and your account number. Okay, so those are pretty important numbers, and that's where you can find them. this page will show some examples of just some checks that were written. So nothing too exciting, but you'll see on here that you know, they put today's date, which again, that's written out. I don't know why they didn't write it out on here. Who it's made out to with the squiggly line, the dollar amount. So again, notice even in the box in the middle, 750, and they did 0.00 with a line. Okay, so nothing could be added to this. This made out to Mayfield Apartments, 750 and no 100s. Okay, so there's no change on this one, so they put no over 100. You could also do 00 over 100, or you can just leave that blank and just draw the line all the way to from the 50 to the end. So 750, squiggle line right at the end of the 50 all the way to the end. That would work also. But to be safer, you could put and 00 over 100 or no over 100, draw the line the rest of the way, and then you put down in the memo field what it's for and sign it. All right, it's pretty straightforward. So how do you keep track of your money that you're spending in a checkbook? So at the back of a checkbook, they have basically like a tracker, okay, that you can fill out. So you know, some people still do this, other people now don't, and they just use there's programs out there, Quicken and other programs that you can use that will download all of your transactions from the bank, and you can go that way. But it's still good if you're going to use a checkbook. It's still good to track in the actual checkbook what you're spending, because then you can go and look at that and compare it to what your bank statement says at the end of the month and reconcile it and make sure that you're on. And if you're not on, then you need to figure out what's different. Why is the bank saying that you have a different amount than your checkbook says? So it's still good to do this. So in this example, the top payment line item is a deposit. The person earned $200 and deposited into their account, so there's a balance of 200. And this is pretty much what it will look like in the back of a checkbook. Now we're going to go and it says there's a payment of $20, and it just says checks. I don't know what they mean by that. They may have gone to the bank and just requested a check from their account. I don't know. But they're making a note here that there's a negative $20. So now their balance is down to 180. On Wednesday, they go to the grocery store, find foods. They spend $23.11, bringing the balance now to 156.89. On the code on the left, they're writing down their check number, so they always know that check number 100 went to this grocery store. Now, if well, let's look at that same day, they went to buy a book. And how do they know they have money for a book? Well, they can always open up their checkbook, see what their balance is, and they have $156, so they know, okay, I'm going to write a $13 check. I'm okay. So they write that $13.50 check. So you just see how this kind of goes through and it tracks. Well, they got down when they wrote their phone bill. On the left, you see that was an auto withdrawal. So that was like they just have it automatically deduct from the account, but they still keep track of that on here because when they go to write checks, they need to know how much money's in here. So there's an automatic withdrawal of $25.50, and that came out here, and it brought down their balance to $87.89. So they're starting to get close now, right? Not a lot of money left in their checking account, but then on Saturday they got a deposit. Okay, so a check came in, they deposited it for $113.76, and now their balance goes back up to $201.65. So this is how that works. You keep track of all of your deposits, all of your payments, and then you know really at any time how much money that you have. If you go to an ATM machine and you withdraw money, then you want to make sure that that's also on here. So like the third line up, it shows cash of 30. So they withdrew $30 of cash. And so you don't want to just write down when you're writing checks. Anytime money's coming out of the account, you want to track that. Let's see, this one is another one. It just kind of shows here's a person, they had $280 come in, they spent 55, 115, 12, etc. You'll see that the balance is dropping. They babysat, so they made 60, and that brought them up to 151. And then they went and they bought a book for $175. That must be a really, really good book, or a college textbook, because that's how those are. Anyway, you'll notice above that line there, the third line up where it says book, they had a balance of $151, and now they wrote a check for $175, and they didn't have enough money. All of a sudden that goes to negative $23. Well, the bank now charges an insufficient fund fee. So they were charged a $36 fee for writing a check that they didn't have money to cover. So now that brings their balance down to $59.85 in the negative. And now they got a paycheck for $288. They deposit that $288, but the balance is already down to $228 because they had pre-spent some of the money. So if you do this right, you can always know, how much money is in the accounts, and you shouldn't have any checks that you write with insufficient funds. So does it match? You want to look at your bank statement. You look at the bank statements, you look at any outstanding deposits or payments or withdrawals, and that number should equal the number that you have on your little check register thing. So that's kind of what you do every month. Well, you should probably do it even more often than monthly, but at the end of the month is when you get your statement, and that's when you can go through and we call it reconciling your checking account and make sure that it matches up. It's good to do that too. Just make sure that there's no spending in the account that didn't belong to you, things like that. So it's good to go through and reconcile, look at your statements, and make sure everything matches up. We're going to talk just for a minute about financial fraud. So what are some common scams that are out there? How do you protect your financial information? I thought we talked a little about this in lesson 1, but I can't remember for sure. So there's a lot of kind of common fake check scams out there. Some of these maybe you've come across, or your parents, sudden riches, where give me your bank information, you've won X number of dollars, send me your account number and ABA number, and we will wire your money. So never send that information to somebody that you don't know, your account number and that ABA number, because now that's what they use to take money out of your account. And if they're able to forge your signature or whatever, now maybe they can get in and fraudulently take money from your account. You'll see like foreign business offers. So some of this stuff you don't see a lot of, but anyway. Work at home, cash your checks and send your cash to an employer. Not sure what they mean by that one. Overpayments, claim that a check's an overpayment and they request excess to be returned. Anyway, so there's like a lot of kind of scams that are out there, I guess. So just be careful of it. We've talked about this before. If it seems too good to be true, it probably is. If somebody's writing you to say, oh, I found some money that belongs to you, send me your account information, don't do it. If someone's saying that you've been chosen to be the U.S. representative of this African mining company, don't believe them. All right. Check terminology. Post date, it means you write like a future date on your check. So I don't know, you really shouldn't have to post date a check for the most part. I mean, people would maybe do that if they don't have enough money in their account to cover a check right now and they're buying something from somebody, and that person allows them to post date it a couple days and then submit the check. But for the most part, you shouldn't have to do that. Drawee. A drawee is the financial institution, the bank that holds the money. When you're drawing money from the account, it's when you're taking money out. A third-party check is a check that's endorsed to somebody different. So banks are always a lot more cautious when someone's trying to issue a third-party check because they want to make sure that that's going to, someone that they know that the account owner is approving. So something to think about. This is not your daily challenge. So create an action plan to outline ways your family can avoid scams, fraud, and theft of financial information. It's actually really a good thing to do. We will make this a challenge, but it's not going to be this extensive. So, but maybe think about and send me over some things that you can do to protect your personal information and your bank information. So this is also not just your bank information, but just your identity. We talk about your identity, which is your social security number and your date of birth. You want to protect that. You don't want anyone to get a hold of that. So what are things that you can do? What should you be cautious of? So be very careful on the internet of websites you go to. Make sure that they're protected sites when you're putting in credit cards. Those types of things are really, really important. Never ever give your social security number to somebody that calls you on the phone. If it's your mom and she needs it, it's one thing, but never, if a company calls you and says, we need to verify your social security number to make sure that you are entitled for this money or whatever, please give us your number. Don't ever do that. If you're reaching out and making an outbound call to a bank, and so you're talking to the bank and they need your social security number to open an account, then it's okay. But if someone calls you and says, I'm with bank so-and-so, I need your social security number, you don't give it. Just hang up the phone, tell them that you'll call them back, and then give it to them. So anyway, what are some things that you can do to protect yourself? Cell phone's another thing, right? A lot of people have a lot of valuable information on their cell phones. What can you do to make sure that information is protected on there? What are different types of financial service providers? So if you get a paycheck, where can you cash it? We'll talk about a few of these things here. So the main financial institutions that you'll deal with are the bank, self-explanatory. You've all heard of banks. Wells Fargo, Bank of America, Chase Bank, some of the bigger ones. They're a for-profit company. They're a private business that's in it to make money. They're usually all over the place. So that's a bank. A credit union is similar to a bank. They provide a lot of the same services. They provide loans. They provide checking accounts. But credit unions are nonprofits, and so they're not set up to make a lot of profits and money, and so because of that, a lot of times their lending rates can be a little bit lower, and their fees on checking accounts and stuff like that are often a lot more reasonable. But credit unions, for the most part, are more local, and so if you have an account with a credit union in Arizona, in New York, it might be hard to find your credit union there if you need to take money out or whatever, versus if you bank at Wells Fargo, you go anywhere in the world and you can find a Wells Fargo. So that's kind of some of the differences. You pay a little bit more for a bank, but you definitely get some benefits that way. Check cashing businesses, you'll see these sometimes around town. I hate to say this, that they're usually in more kind of the lower income areas in town. A lot of people, when you get a paycheck or a check and you deposit it at your bank, the bank won't immediately release that money to you. They put a hold on it. And the reason the bank does that is because, like we talked about, the bank needs to go back now to the person that wrote the check and verify with their bank that money is there. All right. So let's say that John writes a check to Billy. Billy takes that and deposits it at his bank. The bank now needs to go back to John's bank and verify with John's bank that there's money in the account, and then have that money come in and credit to Billy's account. Once that money is there and they know it's there, then they'll release the money to Billy. and that might take 3, 4, 5 days. It could definitely take some time. And so with a bank, when you deposit money with a check, don't count on that money coming right away. There are other ways that you can deposit money and get to it right away, but depositing a check is not one. So a check cashing business, basically what they do is they'll front you that money. They'll basically give you a loan. So during that time that you would normally have to wait for a bank to clear your check, a check cashing company will give you that money up front. And in exchange for that, they charge you interest and fees, and it's very, very expensive. But people that live like paycheck to paycheck and have no money saved, they sometimes don't have a choice. They need to go to like a check cashing place to get that money today because they've got bills to pay tomorrow and they can't wait 4 days for that check to clear. So it's really unfortunate. A lot of these companies years ago, I don't know how it is now, ran into trouble with the law because they were price gouging. They were charging customers way more than they should and other things. So anyway, if at all possible, don't use a check cashing in business. Grocery stores, I don't know why that's in here other than, I mean, you can go to a grocery store and buy something with a debit card and get cash back. If you use a debit card and you're buying a $2 Gatorade, you can say I want $20 cash back, and now they charge your card, $22, and you get your $2 Gatorade and $20 cash back. So you can get cash that way, and I do it sometimes if I'm in a bind and I need cash right away and there's no bank around. So also in grocery stores, they have a lot of banks now. So a lot of grocery stores have little small banking areas. Pawn shop is an area where basically if you have something that you don't want anymore, you can go take it and sell it off to a pawn shop and take kind of useless items and get a little bit of money out of them, and then they sell it. So that's pawn shop. I don't know why that's in here. As you know, I think you know, we didn't put together these slides. So we'll skip that last one. When you're looking at a bank, there's a couple things to consider when you decide who to bank with. One is your lifestyle. Are you a person that likes to do in-person deposits, ATM deposits and withdrawals? Or is online banking important to you? Do you want the convenience of locations and hours? If these things are all important to you, then a bank is probably, the right way to go. If you don't care about some of that stuff and the convenience, and you don't travel a lot, and there's a great, credit union by your house, and fees are important to you, you don't want to pay as much in ATM fees and deposit and maintenance fees, then maybe you go that route. So those are some things to kind of consider when choosing between a bank and a credit union, and even from bank to bank. Some banks offer free checking accounts, some charge you account fees. So you definitely want to look into different banks, what they charge, what kind of services that they offer. So that's our presentation for today. Like I said, it was I think a little quicker. I haven't been watching my clock, but so the lesson for today: if you have never written a check, I want you to write out a check. And if you don't have a checking account and your parents do, ask them if they can void a check, and then you can, fill it in and write it out. If you write void on it, like you can write out a check and then write void across it, and the check's no good. So ask them if they have a checking account, a checkbook, and if they do, write out a check. If they don't have one, or you don't have access to one, then just on a piece of paper, draw up kind of a check and show me and fill it out. And then you don't have to send it to me, just let me know you did that. So that's challenge number one. It's a pretty easy one, but I know there's some of you here, a lot of you in high school and maybe college that haven't written a check. And so I think it'd be good to do that. And then the second challenge assignment is to give me or to think about and write down some ideas on how you can protect your identity, protect your financial information. Okay, so those are the two assignments. Some of you send me over those assignments, and that's fine. But if you do them, I'm taking your word for it. So you can just send me an email, say I participated in the lesson and I did the challenge, and that's fine too. Either way. We're getting close to the end. We appreciate those who have watched and been diligent with all of these lessons. We have one more next week, and I believe that one is on insurance. So that'll be the last one. We'll give it a week or two for people to finish, and then we'll have our drawing, and someone will win a pair of AirPod Pros, so we're excited for that. And again, we appreciate you. Call us or email us with any questions. All right, thanks. Have a great day.